Hello, welcome to the show. You're going to check in with your favorite US stocks, US stock update, and GameStop price targets to follow. If you've got any requests, let me know. Links there in description on the screen at all times. Printer behind me, so I'll get the message. Fed raised rates by 25 basis points as we expected. Powell strongly suggesting there would be little or no further rate cuts this year, is my reading. SPY and Dow, that's DJI, both hitting resistance from 2 weeks of trading days, while NDX, Nasdaq, printed a monthly high. We had that one well covered. We saw a dip after Powell's guidance came out. He said that the Fed officials don't see rate cuts this year as inflation remains too high. They clearly don't want a market reaction that draws intervention. Do no harm, as we say. The majority of Fed officials see the key rate topping out at 5.1%, and they did consider pausing rate hikes. We know that tighter credit conditions follow bank stimulus as they hoard the USDs. Powell made this clear, saying the bank deposits remain safe and sound. Yields drop it, pushing bond prices higher. 10-year Treasury bond down 11 basis points. Yield down. 2-year down 19 basis points. Yields drop, prices increase. From the Discord, we had First Republic Bank continue to climb. Some government backing coming their way. Nike down 3.4% as we spoke about paying attention to Nike. Let's get into the GameStop charts. Mark out the areas of maximum risk. Will the gap be filled? That's down here. Yo, that's not what I wanted. Will the gap be filled? Huge gap. Cavernous. Or are we heading for another double-digit percentage rise? Oh my goodness. Minner. NVDA daily candle 2/3. NVDA daily candle 2/3 of a shooting star pattern, almost a doji yesterday. Check in with Nvidia. Thanks very much, Minner. $5. That's appreciated. Cheers. Great getting the show kicked off with that. Exit that. What's that notification? Exit. Thanks, Minner. $5, appreciated. Always appreciated. Thank you very much. Very generous. Yes, we'll check on Nvidia. No bother, you betcha. Frog Lord. Froggy. Good old Froggy Frog. Yeah, so Nvidia, a lot of interest in Nvidia. A lot of volume. Positive news. That's the way that it's being taken with regards to the competition authorities, investigation, the mergers and whatnot, everything going on around Activision, all the positive news in Bitcoin, all the cryptocurrency ticking up to the top side. People all across that whole spectrum of stocks and sectors related to it, all very positive recently. So we'll see how that continues. Why is the printer not doing Froggy? There it is, Froggy. There he is. Before we move on too quickly, through you and your brother, I learned a lot. Brilliant. Thank you for that. You are welcome. I hope this small donation makes your day. Frickin' legend. $20 from Froggy McFrogs. Thank you very much. I'm glad you're learning. Rising tide. You know, don't go anywhere, Frog Lord. Stay here, learn more and more and more and more and more. Thank you so much for the generous donation. You know, just stick loads of words together. Would be handy, but that's already used, that one. Thanks. Awesome of you, Frog Lord. Yeah, good to see you, Rocky. Right, so we're going to get into these charts. I've got the charts up, yes. Well, we started with SPY. I don't particularly like... Why is it like this? Where's my drawings? I have my own drawings. I have them. That's not them. Oh no, this is all... Oh no. That's what I'm looking for. This will have to do regardless. Right, so price action. SPY, very strong negative reaction, made up to this downward sloping resistance, as you can see, identified with this trend line. And we also hit a 200 period moving average on the daily time frame. That's where we were targeting. It was very positive that we got there, up back above 400. then tested that 200 period moving average on the daily. Sorry, 50. Blue is 200, 50 is red. We tested the 50 simple period moving average on the daily, which with it being above the 50, that's positive orientation. Positive splay, not got a positive slope on the 200 yet. And the price action then today bounced between those two important moving averages. The day before, we opened below the 200, didn't manage to break above it. Then today, opened above it, spurted up. Well, we opened below the 200, spurted up above it, and then lost it on that trend line. Bit of a rejection candle. You put that in context, it's bearishly engulfing. It's a rejection of the 200. It's a rejection of the top trend line. And we've managed to come back and fill the gap there on SPY. So the trailer put into that lesson that we didn't just fill it, but they went beyond it. The 200 period moving average, an important area to look to, and we closed at the low of the candle. So just on candlesticks alone and just on this single one we're looking at to start off with, then yes, very much so. Well, it was a relevant video and there's information to look to there. So a little bit of volatility, not to put it lightly, little bit. And Minner wanted to see what was going on with NVIDIA. Boom. Getting this one straight away. Top side moves there. Strong positive trade suggested by Tradespotting. Not that it was like, you know, what financial advice. So price action then, price action, 31st of January, eh? Since then, and before really, you know, continuation of a positive trend. Managing to make it back above an important support previously, and then resistance. And our target as well. So you've come back in the 50 simple now, strong. It gives you this retracement to 236, which was previous. Let's just update that. Boom. Where's that coming now? Get this trade out of the way. As good as it was, it's in the way now. So where is that 236 disappeared to? Yo, there is 235 spot 54. I'm just going to have 232. It's 252 spot 50, 46 even, right? According to this guy, according to this thing on the right. That's real handy, that thing on the right, isn't it? So you're only looking to hold that, you know, and we're well and truly above it. You broke your previous high. These draws are just actually uncomfortably close to everything. Zoom, zoom, zoom. And don't even indicators start off with, right? So you got your inverted head and shoulders, and you've got your measured move from that, and then some. So we'll turn the drawings back on now. This was one potential one. Overall, it played out like this guy. Where's the measured move? Take it, it's in this. Just borrow you. Well, I mean, don't borrow you. Yeah, that's your measured move, so you can go back where you belong. Managed to exceed the target on that thing. Taking it from this high to the low. That area itself isn't a Fibonacci retracement. Taking it from impulse move here, you've got an 886 in it around what was the measured move target at the 886, but it doesn't explain that extra boost. And so you'd really be looking at this thing as extensions from the low side, and the fact that it managed to make the measured move, the fact that it got there and a little bit extra is very positive. That high then was 262 spot 37. It's pushed after, no, that's 275 it was, pardon me. 275, that's very strong on NVIDIA, right? So managing to hold those levels, positive. 4 hour, 50 simple above the 200, you're in the bullish control zone. Stochastics look a little bit inconclusive. It's all about doing what you feel is best for you. Smash the like, yes, hit the like button. So price action expressing the full volatility that you'd be looking for, along with the increase continuation to the trend. That volatility still, there's nothing finished there necessarily. Is that a rejection candle? No. And it's kind of in context with everything we've seen. You know, the pullbacks on this thing very, very slight, and the fact that it's managed to exceed the 886 retracement on this Fibonacci, and you're not getting anything clear from the ultimate high, suggests that you just be going on up and trying to target the next level of resistance, which is this guy in at around 288. That's the next target to the top side. And if that doesn't happen, which is possible because you're already at a level of resistance between these two, is a lot more liquidity than there was on any part of this move. Oh my goodness gracious me. Moonman, 20 bucks. How you doing, my good friend? Hey, Jamie, would you mind taking a quick look at SRS? It's sort of doing its own thing recently. You betcha I can look at SRS. Well, delete that. Pardon me. Yes, I'll look at SRS. So NVIDIA, what was the question, Minner? Well, 2/3 of a shooting star pattern. Oh, well. On what time frame? Odd, almost doji yesterday. 2/3 of a shooting star. So you're talking about you've got one on the left. Yeah, fair enough. I mean, I'd prefer that different. But yeah, this is, I mean, you're looking at a... What was I looking at there? It's little. You're a little hard pressed to be calling that 2/3 of a shooting star. Almost doji yesterday. Yeah, I mean, if you wanted, you could call it like it's not really a doji. Like you could call it one. And then today, a little bit of a shooting. Yeah, I mean, it looks like a little bit like that, but it's a positive candle itself. You know, gravestone doji. Yeah, it's a little bit if you want to be specific with it. That is a little bit. Also, this is a positive close, despite the fact that it is a doji and you've got it in continuation. Look, there's loads of these throughout the trend. I mean, I suppose that's not, but yeah. 2/3 of a shooting star. Unfortunately, you don't actually have anything useful in that right now to act on. But you can watch the evolution of that and then that'll inform your own decision making. It doesn't scream desperately like execution candle though, unfortunately. So gravestone doji, yes, good shout, Rocky, and also good looking out, Minner. We'll see how it evolves on the 4-hour time frame. It looks like a little bit more negative, and maybe that's what you're talking about there. Possible for it to be a reversal candle. It looks like it got all of Jamie's head and shoulders before bringing it up to price here. It got all of that, yes, and a little bit extra. So the 4-hour, you've got still in the bullish control zone, still on your own in the RSI, still above your own moving average. Stochastics are only really setting yourself up for another potential move. You know, like they come down. Price action holds the 200 period moving average. Come down this time. What do they hold? This guy? What is this guy? 9, right? That'd be very bullish. They don't have to hold the 9. 21, give him yellow. If you hold the 21, looking at the formation here in the 4-hour, you can see you've got a wick at that area. You've got an inflection point in the candle. It's around 252. If you hold that, pardon me. So if you hold 252, that would be possible that you get a positive reaction afterwards. You'd want to then break your prior high, right? The high of the formation, not just the body, which you'd also want to do. You could potentially test in it around the 9 exponential. You probably do, and a better value entry if it's still a bullish trade based off this formation would be in it around that area. You know, manage your risk there. If you drop below that moving average, perhaps this zone here is where you're looking for your entry, because if you don't get it here, then there's a high chance of it coming down, hitting this important level, and if it doesn't, then it's come down, test 200 period moving average at the 236 right now on the 4-hour, which would be like immediately then probably where you'd go when you break 252. That is, i.e. down to 235. Boom. Oh my goodness, this is brilliant. XD, how you doing, X? Thoughts and choice? Seems like good earnings. Extend hours move took us up to 4-hour 200 simple moving average and previous high, but quickly dropped back to support. Historical volatility percentile on 4-hour looking like a big volatility is coming. Gaps and flashes to fill above, some bullish divergence. Thanks, cool. Look at Chewy in just after we get to SRS, which, thank you so much, Froglord. And winner, right? So I think we've got close to the potential, the best case analysis, the most simple, concise version of the analysis here. Struggled through it there. And managed to find 21 simple exponential, 21 exponential as a good potential area to manage your risk on the 4-hour time frame. You also find a degree of support there. If it doesn't break, you've got the test of the 200 period moving average, which you've seen here. You've seen it at the most recent low. And if you did break that 21, perhaps that's where you'd go to. In terms of divergence, I'm not seeing anything desperately important. You are, both of these times, overbought. No, that's the stochastics. Pardon me, you're not overbought all that much. You've not got any divergence here looking left. You've not got anything to worry about. That's all. This trend still seems positive. It's moving average display. Also, if this 21 and 9, where's 200 period on this? That's the 50. If I keep calling the red one the 200, I mean the 50, and the blue one is the 200. It's down at golden pocket retracement at 182, which if you don't hold the 200 and the trend breaks, you'll come back and fill the gap, taking you down to a 382 at $210 or so. This gap here, and if that doesn't arrest the development, downward sloping trend afterwards, and you'll come back and you'll test golden pocket retracement, and you'll be back in at around 185, down to maybe 178. So you've got to be careful, right? Now, I'm not saying it's going to happen, but if it does break the 200, a 382 would be closing the gap, so you would anticipate it coming in around these levels. If that doesn't hold, the 200 here, beyond the 50% retracement, where there is no obvious, there's this actually, but it's too far away. So you're looking at it testing in around 50 simple, and because that's so close to the 200 period moving average, if this happens quickly, you'll come down, you'll do a test of the golden pocket. So the support level looks like it is at around these areas, somewhere around here, if everything completely fails. Somewhere around here. And if that doesn't hold, bad news. So that's what we're thinking on NVIDIA, but actually it would be good if it just continue to do what it is doing, and probability is that it does. Sunny today, sunny tomorrow. So that was NVIDIA, and then we're going to look at Moonman, SRS, doing its own thing. SRS, ultra short real estate investment trust. Strong moves to the top side. SRS moving to the top side. That's super interesting that it's such a strong move to the top side. The reason that money might move into real estate investment trusts. Yo, awesome. Thanks, man. Cheers. Thank you. Needed to hear it. Is what it is until it is what it isn't. Yes, very much so. And that's what you'd like to keep doing. Probability on your side. Thanks so much, Minner. What was I just saying there previously? Money. Why would money be going into real estate investment trusts now? Well, real estate investment trusts took a massive hit to their valuation. The way that we look at real estate investment trust isn't on earnings per share, because there's degrees of difference between the way that you would look at the balance sheet of a real estate investment trust as opposed to a commercial operation that was a business in and of its own right? It would have a different sort of structure to its balance sheet due to the nature of the way it collects income. And so the measurement of those two details, like earnings per share across equities and real estate investment, even when you're using these type of instruments, doesn't provide a proper comparison. It is a little bit apples oranges. And so people tend to use the book value by the number of shares for real estate investment trusts, and then they'll compare that to the equivalent return on equities. And so using that measure, we can say that real estate investment trusts, some in particular that are exposed to sensitive to the dangers of lockdowns and COVID, they've had an outsized impact, but all of them have taken a big hit because of the reduced risk on treasury bonds. Like we were talking about the rates there had taken a little bit of a hit at the start of the show. We introduced talking about the 10-year and 2-year treasury bonds taking a little bit of a hit, and that was due to the guidance that came from the Federal Reserve, and that rate there going down pushes the price of the bonds itself up. But that money often goes to other places where it's looking for a return, and some of that could be into real estate investment trusts, which is why some of them you might see going through a little bit of an uptick if it is true that the Fed's pulling back. It looks like they are. So that's where you might typically expect it to go. There's still then question marks over what type of investment trust here are you looking to go into, because something like equity, which you see on the real estate investments watch list here. You've got VNQ, which is where most of liquidity is. And they're down 3.74%. Just get this up, right? So to say SRS is doing its own thing isn't necessarily true, because this is where most of the money is in real estate investment trusts. And if we're looking for a big influx into the market because of the change that we're seeing in government bonds, then we would expect to see some big moves in volume on this chart, and we're not seeing them as the trend moves to the top side. More recently, we had a bigger peak in volume around the 23rd on Monday than we have here on Wednesday, so that would be typical to Mondays and Fridays for this type of instrument. So you're seeing that potential rotation in certain types of funds, certain money, certain flows, money flows into this, right? So there is the potential for certain avenues, money to flow towards real estate investment trusts out of treasury bonds, and we're not seeing it on VNQ, which is where we would expect to see it showing up first. So if we go SRS, this is just ProShares Ultra Short, 3x the opposite direction of VNQ, and that's what you'd be expecting to see. It's up 6.89%, and VNQ itself down 3.74%, so that's not completely out of the question, right? To see it move twice that percentage and to be going the opposite direction, that's what we'd be anticipating. So continuation there on that move. Looks like it's coming back and putting in something similar to the previous trend. You've managed to make it above these previous highs here. That's interesting. This was in line with these previous upward sloping trend line underneath. And if you are looking at this megaphone, then like crazy moves back up to this 1618, 1414, probably 23, and then 24, 29. That's so, another 20% on without even oscillating back down to find support. That would be a big, big move. So far, you've made it towards the golden pocket. Asking for much more than this is very, very dodgy, risk on, very much so. There's a 786 of that other guy, and it's above the golden pocket. It's where price action is right now. So you managed to break above where we are now, 20 spot 17 to 20 spot 20. Then 21, 22 also comes in at resistance, and then the next high also comes in at around 886. And you couldn't rule at the 1414. This previous guy, now full retracement back to you don't even need these horizontals, really, do you? If you're branded, this one again, you don't actually need that. You don't need that. You don't really need that. It's all this target that we were talking about in around 2452, and the area to break is kind of already there. It's all about now looking for a good value entry. If you're not, this wasn't relevant to you, then you're looking for a good value entry. You've got a cross on the 4-hour time frame with a 50 simple going through the 200, and that's also in line with this previous area of resistance. So you could come back there, test around 18 spot 19. That's very possible. You would be exceeding the inflection point on the previous high, so you're looking for a higher low there and support. If you don't find it, then this thing collapses back down. You're looking at test this support line again. When this failing as a big megaphone formation, which typically they do, right? That's how these go. They would fail at some stage rather than put in the measured move and go, how imagine how big it would be after this. The measured move is the widest part within the formation. So, just didn't. And so you're talking about it like an upward sloping broadening wedge, and then not seeing it on a lot of them, hence the short side gains. Recently on a group of them, nice to see JME Old suggested trades on it haven't been absolutely smashed. Yes, yeah, he was all about the entry. We could never guarantee they were going to get these huge moves, but they've done well. So yeah, SRS, it's not necessarily doing its own thing per se. You don't always get the same equivalent, 3x move that you would be looking for compared to the other direction on VNQ because of the nature of the way this works with swaps and, losses are compounded. So time has an impact on this ticker. Therefore, long-term holds aren't particularly advisable. If you go up and you look at different time frames, and we've already seen daily, but back here to the 2-day, turn off the drawings, make it slightly clearer what's going on. 50 simples above the 200 price action, not trending. 3-day, we've had to cross there, and price actions performed well at that area. 5-day had a flash. So, I can't take all the credit there for the previous trade rookie. There was this formation. There was 3 rising valleys. There was bullish divergence here. Boom, 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 boom. Boom. boom, 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 boom. We did look to this. We saw it at the time. We did lots of shows about this sort of thing. So yes, we got a lot of it in this, and a lot of it was due to your indicator. Thank you very much. Get that yourself at patreon.com/Rocky Outcrop. Have you got it, Rocky? Hello all. Finally get to catch a live one. Good to see you, Jason. Where have you been? Great to see you. This cash is king until it isn't. I.e. the cash. I.e. So there's a lot of different ways you can manage your risk then when you're looking at real estate investment trusts. If you want to go long, you're looking to take advantage of these sorts of tickers which have got huge dividends, and that huge dividend is what the money is flowing into when it does. Real estate investment trusts will be going there in search of passive income, and it would be exiting treasury bonds typically. If that means that rates are coming down, so you're getting a better return on your money in this type of investment, then you would be looking to assets that are going to provide you with a capital return as well as the passive income. In that sense, you might be looking for real estate investment trusts that have taken a significant hit to their book value, but have still got strong positive expectations with regards to their dividend and how the market perceives that risk, because typically anything that's offering you above 10% passive income is a highly dodgy investment that you'd have to time your entry to, and be highly aware of any potential events that could damage that. So you want to be timing it very well, and typically over the last couple of years there hasn't been all that many good points. There is now though. Working at the cheese sandwich shop, unfortunately. Oh my goodness, at the sandwich shop. That's an upgrade from the factory. You know, you're in there with a little bit of the service economy, smile on your face, singing the Mr. Cheese song every day. You love it, Jason and Kirsten. You love it, so you do. Right, could be worse. You could be at the factory, you know. You'd see what really goes into those cheese sandwiches. Then you wouldn't have a smile on your face. You wouldn't be singing about Mr. Cheese either. It'd be nightmares. Right, and while people are looking at yield, a lot of the cash flows are seeking other homes than investment trusts which may not deliver on dividend. REITs without dividends right now are dead. Exactly, yes. So you're looking for realistic dividends. Realistic, what does that mean? It just has to be a low number. That's what a lot of people think. No, it has to be the nature of that particular real estate investment trust. What's it looking at? Is it commercial property? You know, like one of the... Say, for example, a good left field real estate investment trust is one that invests in cell phone towers, generate huge revenue, low cost basis, you know, forward looking accounts that are very reliable. And they also took a massive hit to their book value because of the way the economy turned. But that hasn't necessarily equalized the risk and the opportunity. Those real estate investment trusts that still want to grow and have cash on hand, along with positive cash flow, they're able to themselves pass on higher dividends. And if it comes through that they've recently decided to increase that dividend, then it's true to say that the safest dividend is a recently announced dividend. So there you go. You know, you look for the ones that are high dividend, that equals anything over 10%. You look for ones that have got a big hit to the book value. That's a lot of them right now, as opposed to you're looking at earnings per share. You're actually looking at book value per share to look for that deep value. And then you're looking for recently announced dividends, so that are also themselves not ex-dividend yet, so that the reduction in value will be priced in due to, you know, like everybody in the market knows there's a dividend coming. So if that's 10%, you can expect that go ex-dividend, and there's 10% value that was weighing down that price. And a lot of big opportunities now going ex-dividend in the next month. So I'm going to update there'll be an update coming to the real estate investment trust series that you've seen 3, 4, 5 episodes now, I think, on Discord and channel members, and there'll be another big one coming next week with some big opportunities, I think, to help people grow their passive income in their accounts and their other opportunities for where they might deploy risk-free funds, what you would typically be putting into bonds or that sort of thing, which I think there'll be a little bit of rotation money soon. So you might want to be ahead of that curve, and there's different ways of scaling into positions and whatnot. So interesting things to think about. Sell REITs. So you're looking at some of them already, Colony. That was good shout. I'll be covering them next week. Stay tuned. I'll make sure to tell you all about it for sure. And we'll add it to the series, and then there'll be a number of them there. So if you want to join the Patreon, definitely do that. www.patreon.com/Tradespotting. And the channel member, you can join that. Hit the join button down below where you would normally hit subscribe. If you haven't yet subscribed, definitely do that and hit like. Thus the rotation and money point JME is making. Thanks for helping me out there, Rocky. What else did I miss? Sorry, I'm just getting off topic there. RSSRS. Chewy, XD, Chewy, yes. And then that's it. Okay, phew, didn't miss too much. Right, Chewy, yes. So they've had a lot of, so their earnings, yes. So we talked about this earlier. Earnings, Nike, Chewy, GameStop, Chewy yesterday, Nike Monday. There's those three rising valleys. There's this previous low. This is the news. Chewy to expand the business outside the US. That's big news. Big news for Chewy 2 hours ago. Chewy's lower active customers driven by softer spending trends. Oh, what a sentence. Oh. And then Chewy swings to unexpected unexpected quarter four profit amid higher sales. What do you mean amid higher sales? It's so annoying the way these things are written. Like, Chewy swings to unexpected Q4, right, would be better than 4, right, but skip that. Chewy swings to unexpected Q4 profit amid higher sales. What's the surprise in that sentence? I mean, that's what... Why did you... Anyway, so yeah, great news. Great news. Fantastic news. We'll stick on the candlesticks. Yeah, we'll stay on the candlesticks. And we've got drawings. Ho ho! Handy! Handy. Right, spread it out. Spread them. You spread them. Oof, there's a bit of a doji. 200 period moving average. Oh, you can see now this is very, very dodgy. This 200 period moving average on the weekly time frame. Holding price action so far. You have managed to wick below, get towards this entry. I know a lot of people in the Discord were looking at this and jumped in. I'm surprised by that sentence. Soft but higher. Unexpected profits. People are mad. Yes, people are crazy. Stay away from them. So you're looking at this 200 period moving average and you're like, that's why ominous. Especially with price action having making it back above this potential downward sloping resistance. So what is this? It's part of some crazy ass broadening get out my town wedge. I don't know about this, Sputter. I was making a point at the time. I probably was about how it held what would be then the basis line of that formation, in which case you could see a breakout back to the prior highs. You'd be testing it around 79, 80, 96. Wow. If that all went well, that'd be great. That's moving averages there. You've got a cross with a 9 below the 21. You'll know what Tradespotting thinks of a cross of the 9 period moving average below the 21. You just care at all. Right? Don't care at all. So, but there's a 200 period right next to it. He cares about that on the weekly. My goodness, so he does. 5 day, no nose. No new nose, blue nose. Daily. Should we just skip the daily and be all mavericks? Just call me back because I'm a maverick. So there's, yeah. Pulling away there. Tacking away from bearish control zone. Don't want to go down there, but you don't have much choice about it because you're putting in the cat vomit continuation divergence as you meet your downward sloping trend line above price action. That's not good. Stochastics coming up here. This is where you get when you... No, right. Stop it with the stupid analogies. So the stochastics are coming to the perfect area to turn around and price action to collapse. Historical volatility there on the daily profile, daily time frame. That's low, very low. What's the 2-day say? Oh, you got a 24 print. Often if you lose that, you'll go down, test 12, maybe 10. Get a 10. You've got the signal. So, but you've not got it yet. Though this thing's been plenty volatile and this signal only just came into existence, right? It needs 100 look backs. Why are the frogs so mad? Have you ever heard about those tribes that get high off frogs? Well, they have to walk around all day like that. Those frogs, like, they don't get a day off. They're like Tradespotting. It's like all day, every day, hardcore committed. So the frogs are absolutely off their tits. So then they get a little bit mad. I think either that or it's like you're probably getting into the point that they used to be tradpoles and then they have the parents abandoned them, so they've got attachment issues, right? Insecure attachment. All of the frogs have got this. That's probably what you were getting at, and you're right. No frog licking here. But Frog Lord, he's managed to overcome all of these problems, which is why, hence the name Frog Lord, right? The other frogs worship him. Worship and then work for. The ghost of the Pharaoh, formerly known as Mike. Yo, Mike, I said your name the other day a few times, and it got demonetized. And then I appealed against it, thinking, like, well, the human will read it or watch it. And, I mean, I was obviously reading somebody's name, so they'll figure it out. And they came back confirmed that it did break the terms. It's like, well, I mean, it doesn't. I mean, it literally doesn't. How can you say that? But hey, this sometimes goes that way. It's not your fault, Mike. it is your fault. And I willingly participated in the whole experience because I thought it was funny. I F them tadpoles. You're telling me. Right, so this broadening thing, I did this crap, right? I don't like this. Okay, I'm going to delete that. I also don't need this. Where was this even going? I don't like that, me that did that. Right, so, I mean, you can draw that. That's fine. Price action, lost information, came back in, displacement. You're probably going to test the far side. Right, you did manage to do that. Came back horizontal. That was a breakout point, as well as more or less where you find this continuation of that horizontal, that diagonal, which is now broken, but continuation would be in around there. Also meets where the horizontal is. That's the point, really. And you came back up and bounced between these two levels, so you're not actually trending, sideways price action. So the thing with sideways price action is when it starts, that's what it's doing. It's not trending, it is consolidating, and you want to be trying to make an assessment of whether it's accumulation or distribution, which the simplest way of doing that is through higher highs, lower highs, and then you'd be checking into the momentum and the strength in those moves. So what you want to be doing is looking for those money flows, seeing like what's happening as the price is changing. You get some people who are like, who say, how there's the odd person who'll advertise on this YouTube video and others. I often see them advertising on my brother's. They'll be talking about how, are you using these stupid charts for stupid people? Are you in this 21st century using stupid charts? Well, I can tell you, I used to work for Barclays, right, who are a scam bank, right? They're a nightmare bank, right? They're definitely up there with one of if there's a group of evil banks that hide and talk about everyone else behind their back and talk about other banks, say nasty things about them. Barclays are in that gang of banks, right? They're definitely there. They're there. Now, this isn't just my personal experience of them, which is quite bad because they took my dad's house off him, even though he'd never missed a mortgage payment, when he had a brain tumor and made him homeless. That's what they do. He never missed a mortgage payment. And the only reason they got away with it was because he was on death's door and couldn't fight them legally. And at the same time as it was happening, their CEO was funding terrorism via their money laundering and committing fraud, and was then subsequently invested by the serious fraud team. Not just for the little toddler fraud team, but the serious one. So this Barclays, right? Now, anyway, if you listen back to the story, you those stupid charts, all those stupid charts, and they're going money flow. Well, how much use to you is that in a low liquidity environment? Right, where everything's driven by the short positions. It's no use to you whatsoever for judging trend in markets. It's literally unhelpful, right? But if God forbid that would enter in his narrative, because it would destroy his entire marketing, his entire credibility would completely disappear and evaporate if that point was to be acknowledged by him, because he leads with slagging off candlestick charts, which is the most popular charts to use at the banks, right? Yeah, sure, everyone looks at money flow, right? Everybody does, especially if you're one of the big banks, because you try to make sure that you're not showing up there. but you're not, like, that's the point. Hey, you try to make sure you're not showing up there, right? So where do you think you anyway? But anyway, that was just a slight brief interlude. Hit the like button. Back to the show now. Chewy earnings. Where's the earnings here? They are. Why are you saying that? I thought they were on Tuesday. What's with this coming telling me they're not till a million? There they are. There. We like so 108%. 2% on the revenue, 108% above expectations on earnings per share at 0.01. So that's profit. It's sort of like in your face, because you didn't have to make it like that. You could have adjusted the account. That guy he's a funny. He's just advertising ROI guy who's found a way of playing off people's insecurities. Yeah, it's just like for every advert he makes however much, or for every 1,000 he makes however much, which pays for the adverts and then gets people into his thing, and then whatever. It's not rocket science. But he's, what else, right? So cool. I mean, I used to work for Barclays, right? That's like, I wouldn't be telling people, hey, but whatever. And then, so the price action is going sideways. So you really wanted to break this downward sloping resistance, break the 50 simple, break the 200. The fact the 50 simple is below the 200, that's not great. Daily time frame, what's it on the daily? That's where I really want to make that assessment. Where that's not the case. 50 is above the 200. Price action resistance there, and 21, and downward sloping horizontal, diagonal. Ugh. So, that's sinful saying that, mistakes, but breaking that low, not fantastic, but it looks like it was a little bit of a gap. It didn't manage to come past the low of the formation or anywhere near it yet. Didn't even get this entry, 886. Beyond that, where's this coming from? Low here, beyond 886 there. Yes, if you did get to the stop of this guy, if it didn't bounce then at 34, you don't want to hold it there. If it didn't bounce at 34, next stop would be the 1.13832 with this prior low, and then coming back and testing the low here, because like we said, this is sideways price action, so getting down to those levels being 29, not all that crazy. A retracement back down to these prior lows, that would be like so far the good value. Anywhere in around an 886 from this Fibonacci would be like the deep retracement value. So you're looking at like maybe an entry on this suggested trade could be in at around 24.53. You definitely don't really want it beyond these levels, because you'll be, unless it's like to try and catch this and you're actually looking for an entry in these zones here, which is what this trade setup is. If not, then you've got a potential opportunity in around here, because it's a prior level of support, golden pocket retracement on the Fibonacci retracement up here. And if that doesn't work, pardon me, if you're getting a reaction ahead of that, then the best possible opportunity would be this 886. You've already gone beyond the 786 and you haven't managed to do anything emphatic at resistance, having come down to support. So that's what you're looking at. Test this area, a bounce. But that's looking increasingly unlikely because of the period of distribution you're seeing here, which is what it looks like. RSI is below the center line. It got cat vomit all over this topside move. And it looks like you're going to at least test this area. If it doesn't hold, you'll break there and you'll come in. And that's weird because the earnings are so fantastic. But it's not weird because people didn't buy this because the earnings looked like, people didn't know the earnings were going to be, and they didn't. And the expectations about it were it was going to be negative. So they weren't buying it for that reason alone. They were trading it for the risk and the reward in the capital appreciation, which they then took the liquidity on at these areas where you got bearish divergence and you never managed to make it into the bullish control zone, and then you lost the center line RSI and your moving average and you're back inside this formation. It's just like you had displacement back here, you've had it here, you've had it to the extremes either side, where you find like the most important horizontal levels either side of the diagonal here, and now on the top side here. And like it's not all that crazy then when you look back on that channel, which already exceeded these lows here, It's not very strictly drawn. So that's what we're thinking. XD, Chewy. We get it through it all. We get it through it. All of the quests. And did we get anything else? Nothing to see there. Nothing to see there. Anything here I missed? Don't see anything there. Let me just check. This is the last place. Jason and Kirsten. Boom. 11 months. Minner, $5. Thank you very much. You're welcome there. Chewy, we did it, Eeks. Moonman, did we get to this one? SRS, we did. Well, we got to that and then some. Froglord, $20. Thank you so much. You're appreciated, buddy. Minner again, delete yourself yesterday. I didn't get around to that. Bing bong, delete yourself. Boom. Thanks so much. That made the show. Delete yourself. $50 donated yesterday. Made the show. Lucky to have yous. Thanks for supporting me. Tradespotting. Do you think JME will hit 34 and leave the gap unfilled? That was good technical analysis. Well done, Tradespotting. Not that you need me to tell you that. Thanks, Rocky. Appreciate it. So, GameStop-y. We're on to the GameStop part of the show. Everybody's just a lot of forbearance. They didn't want to hear about real estate investment trust and passive income. They changed their mind. GameStop's moving again, and nobody cares anymore. Why did this thing happen? Screw you, Genie Energy. And your scam wicks. Like, what are you doing to people with these things, eh? Screw you, get back in the bottle. Go away. Genie Energy is going back in the bottle. Off. Turn off the drawings. Still looks beautiful. There's the weekly time frame where you can see we came up and tested that 200 period. The 50 simple period moving. 50 simple moving average. Note that JME and I maintain a constant focus on price action first in all of our analysis that we do. Darn tootin'. Weekly time frame, strong move there. Body of that candle contained within the range of the formation it came from. The wick took you up to the 200, but then you closed back within that previous range that we're talking about. We've not closed yet. The week's only just started. 2-day time frame. I mean, it's not just started. Spotter! Right, so there's the wave, you know, eventually price action managed, eventually. The moving averages, those which are calculated with a look back period, obviously lag and take time to catch up with price action. So when you had this cresting, then you had time for the price action to meet these moving averages. The 50 simple, which is a shorter period moving average, this red one, went through the 200. 200 then continued its previous trajectory because it takes longer to catch up. So people would describe it as a slower moving average, but it's not. It's longer moving average. And in this instance, it then came from below. 50 simple below, 200 period moving average above. Price actions recovered that 50 simple and then some, and so some people will look to the 200, which is in at around $32 at the minute on the 2-day, where your HVP, it gave you the signal back here, you crossed above your own moving average and you lost it in at around this top side of this previous formation here on the 2-day. Subsequent to that, you never got down and got the full signal on the 2-day, where it gives you the most reliable move. There on the daily time frame, you got a bang back above the moving average, and you haven't yet lost that. So everything looking good there, but you're already at this top side 200 period moving average at 26.85 there, closed below it, and then post market you lost another 50 cents. Oh my god, that 50 cents! Really, the way it's like a big chunk of a car. So it's like, but I don't think about it like, I stopped doing that. I watched Rocky Show earlier, positive, but anyway, stop thinking about it. I've been through this enough. Right, there's a lot worse than that. That's what it is. Right, so there's 200 period moving average. Yeah, so I really want to make it above there, and we've not done it yet, which is not a super duper fantastic. That's what they described in Europe, right? That's what they'd be saying now. I mean, you know, the sophisticated among us are all from Europe, so you know this. Not super fantastic. I think it's like German, is it? The Germans will know anyway. They know a lot of things. Right, so the 200 period moving average. Oh, suits you, sir. And then there's not very much here, right, because of the nature of this move, right? Clearly there's loads of continuation divergence, but also question, is it breaking the trend? So like until such times we get confirmation, which itself comes with a retracement or a breakout, then you don't know, and we've not had either of those. And then the stochastics, well, they would be doing that, wouldn't they? And then HVP, well, we've not even got confirmation that's printing above the moving average yet, because it's only on the daily time frame and it's only just happened there. So, and like I say, no retracement, no breakout, you're in danger of it just disappearing, back being a one-off flash, and then you're still waiting, building the volatility, building, which would mean, if that was the case, the price action isn't moving away from here at pace, covering a big range in a low period of time. That'd be a large dispersal of price action over a short period of time. Be increase in volatility, wouldn't it? So there's been a volatility crush subsequent to an outsized move on GME. What does that remind you of? GME, every time there is one. Like, why? Because there's desks run by Barclays. Barclays, they've got the largest volatility desk in the UK, probably in Europe, maybe in the world. And what they do is they trade stocks like GME. They've got a list that used to be of 9 different tickers. It's bigger now because, you know, they get their fingers in all those pies. And this is Barclays with the money flow. Barclays, you come along here, mate. You don't use these charts. No, we've got these secret charts. We've got these secret charts that only people who Barclays use. We use them in Barclays. We trade this money flow here. We don't use these other things here for idiots. Yeah, like they're for idiots. So in Barclays, and then what they do, Barclays, we've got volatility as well. So the day starts off and they're looking for these stocks, this ticker, to move more than 10%. They're like, come on, guys, let's get in there. Yeah, let's do all the magic, guys. Come on, guys. Whoever shorts at the least buys all the drinks in the pub. Tougher. And then they, wow, come on. Who's got to short us more? All the stupid fannies that work at Barclays. Right, that's what they're doing on the volatility desk. So, you know, and then they've got a product, like they advertise it to clients too. They're like, this is what we do. You know, they'll have like a prospectus and that, and they'll have reporting details on how well that fund's doing. Somebody should get that shit because it's embarrassing. Somebody get that and then go on your boy's show and be like, look at you and your fanny mates. Yeah. Or come on here, I'll do a show about it. I could do it, but I just don't want to look at their nonsense. But that's what they do, eh? They've got that desk and they've got people who work there, and that's their job. And every day that's what they do. But that's not them causing this, you know. It's a lot of people taking advantage of the fact that the volatility was up, so their contract spiked, so they got rid of them. Maybe they put some of the profits back into the shares. You know, it's a lot of momentum there for behind this stock. That's what momentum is when it's the words used by journalists as opposed to a technical trader talking about the magnitude of strength behind any given move. That would be momentum. But when a financial journalist, quote unquote, is talking about, of which there's about 5, when one of them are talking about, with any credibility or respect, when they're talking about momentum, what they mean is that continual increase in the underlying as part of a retail trader's portfolio, i.e. if they're trading options, then they either exercise some of those contracts and or some of the profits are put back into the underlying. And I would suggest you'd buy at support as opposed to resistance, and that you screw this idea of what the journalists want to create a narrative of momentum using the word wrong, and instead we just do what suits us, you know, take our time, right? Because it's going to take time anyway. Because people like Barclays, oh guys, gotta come quickly, come quickly. It moved a little bit, guys, it moved a little bit. Whoa, we can finally make some money because that's how they trade. Because that's it. It's kind of embarrassing. You know, and then they're like, the person you make the less money, you buying all the drinks. Like, well, no, like, these are all fannies. Not like, imagine, but they do. It's like some weird. And then they, you know, like, sure, David Cameron has admitted, like, hasn't he admitted? I don't know, right? I'm pretty sure he's admitted fornicating with a dead pig at university with all of his mates together in some huge weird orgy. So if he's doing that, right, what are they doing over at Barclays? Yeah, I know there are. Like, we all know. We all know. So, you know, yeah, I mean, this is the GME is brilliant, isn't it? 4-hour time frame, that's where you were looking at the HVP. It's already did it once, and that took... The trend didn't change, well, nor did, like, if I turn off the drawings, despite the fact that you had an outsized move in terms of the previous trend here. Because this is a 4-hour look back period and so on. It kind of ruins the way that this thing gives you signals, and you look at it slightly differently, not in terms of like confirmation. And it doesn't quite match up with, like, you know, if it works on the 4-hour, then you'll be then definitely looking at it on the 2-day or vice versa. It's not quite the way the scale works and the way the look back period and the construction of this thing. And that's why this sort of indicator would be a little bit esoteric for a lot of people. but it provides advantages if you use it the way I do. Loads that I think obviously have proved it. So what are we talking about? I can't even remember. It was something to do with GME, 4-hour HVP, giving you a signal. That wasn't very reliable. It certainly isn't. I mean, you really want to see now the back end of this. So volatility increase and persist with the moving average then taking a positive slope. And these blue bars above that moving average and persisting above that moving average close after close after close. So we're not seeing it yet. But then on the 4-hour stochastics, that's a little bit dodgy. The RSI, nothing to worry about there yet. But oof. And then, like, I mean, to stay on the 4-hour will not ignore the massive gap. If I turn off those moving averages, whereas the 200 period comes in at 18.85. What about the volume yesterday? Huge. So 1885, top gap would be filled at around 1833. Will we fill this gap? Well, just to quickly answer that point, this is on the daily time frame. We have previously seen a gap below here, which we have not yet filled. And we still made a move from above at 1833, where the next gap filled, to 26.85, right? Still made that move, which is nearly 60% without filling this guy. And that's just there recently and a clear example to look to. That doesn't mean that we're now never going to fill any gaps ever again. It just means that now these two are so very approximate to each other, likely to get filled at the same time. So you'd be thinking that 200 period moving average that we saw there on the 4-hour coming in at the bottom side of that gap, you would be probably breaking that if you were closing the first gap. You'd probably go through the 200 and close the second. And there would be momentum in that move likely as well, you know, if it came from a bearishly divergent top, which if this turns around at the minute, it will be. So, well, no, actually, it won't be, not necessarily on this time frame. So take that last 50 seconds, strike it from your mind. It never happened, right? So what we're actually looking at is then the two gaps and the 200 period moving average. And if it's all getting filled in some cascading nightmare, then that's from not putting in any test of our already set resistance at the top part candle here and around 27 Yodashi, then you'll be looking at quite high moves back down, strong volatility, not with the price action going in the direction you wanted it to. So the HVP and the 4 isn't giving us signals, and if they are giving us signals, they're not great. And then back to the daily with those moving averages on, just to see where they come in at. 200's in at around, what? It's even higher. Oh my goodness gracious me. Well, that's because, you know, so much of recent price action has been below here, and the longer time frames, moving average is then a longer one, so it doesn't have that recent nightmarish. You've got a cross there in at around 1843. Now, you don't have to test those crosses, but it's the daily time frame. And the fact that these have to cross from below speaks to the negative splay in the moving averages, which is all to do with the negative strong downtrend. So you really need to see that turn around by this thing holding support, which doesn't suggest then going and filling those gaps immediately. It just doesn't. Whereas the 4-hour, you can see that it could just then, if it was to do it, it could just do it immediately. And that fits with the, you know, like people wouldn't be expecting it, right? Because it doesn't look like it's likely immediately on the daily. And we've just already confirmed those gaps that, you know, we're trending in the other direction. And so you're asking for the probabilities to be in your favor is to then rely on what's happened most recently. So that doesn't look like it's going to break, and it doesn't look like you're going to fall. I mean, this downward sloping resistance, it's a diagonal thing. Like, I mean, price action might be following it just because I've drawn it and moved it, but this was an accidental move at some point. It should have actually been, this is like, come on, I'm not even on the right tool, that's why. Come on, mate. I mean, that's been moved, by me, by accident at some point, hasn't it? And then this guy, or mean, I could say by accident, but if you're moving it for whatever reason, it probably had a point to make. And this is what is the channel. So we have only made it to those moving averages. You know, the 1.618 is still up at around $34. This 236, when you look left, it's important. Fibonacci, talking about, you know, that in the show yesterday, Plato and Aristotle, and then subsequently, you know, Marx, Kant. Well, previous to that, Descartes, utilitarianism with Hume, spoke about Kant. You know, so anyway, why am I talking about that? Right, so the downward sloping channel, yeah, like the top side of that resistance still in it around there at $34, right? No surprise. That's where we'd be going if we managed to break up again. I'd like that. Would you like that? Yes, can. Would you like that? You betcha you'd like that. So that's a lot of likes. Yeah, what about you? Did you hit the like button? Did ya? Did ya? Hey, do you fancy becoming a member of the channel? You could totally do that. You know, you totally can. Just hit that join button down underneath there. Do it. So hit the like button as well. The move on this thing, yeah, still looking for it. I mean, you know, like a lot of people will be nervous, and there's a 4 hour. It's not doing anything. In fact, to the top side. But we had that news report, you know, SPY tried to keep going to the top side. Then why would GME want to just go back and fill this gap all of its own? No, I mean, I don't think so. I think people are generally now positive looking at GME, just put in positive earnings report, literally turning a profit. Not just they've got a positive cash flow, but they were turning in a profit in that quarter. We're going to turn that into, you know, a full year profit and then string 3 or 4 of them together. And the share price will increase again then. It'll be added to a greater proportion of more and more larger funds. And if it maintains that direction for, say, we just sat through 2 years of hell, if it now goes through 2 years of mild positive relief, then you'd be added to the S&P 500, not just like in the top, no, not just in the top 500 based on market cap, but you'd be in there officially, and as such, you'd be added to so many more funds. You know, you get picked up by huge funds, say GameStop would be, and that's just the way they are, right? They just track these funds, so they just have to add them. They'd add an allocation of it. The bigger it got, the more they'd likely contribute like a slightly higher, wider risk profile to it. That would then defeat these volatility desks that hold back price rises like this. You'd get stronger trending moves to the top side, and you'd watch your value increase lows and lows. We'd be able to build gamma ramps. Not that we would, right? Because I'm just joking, you know, enjoying the fruits. Right, I'm just joking. Don't take me serious, Gary. And I mean, I was seriously joking, right? Do take me seriously in that I'm serious that I was joking. I wasn't serious about being serious, right? I don't know. I only like the stock. Everyone here likes the stock, and we only like it because other people like it. But, you know, that's the main reason. But we all make our own decisions at the same time. Amazing paradox, isn't it? Anyway, go screw yourself. So you're looking at, yeah, you know, that, I mean, you would say that, you know, Tradespotting, can you look at back on further gaps, you know, because like that's just the one that just happened and in the trend. And yeah, sure, we could do. Like there was a gap somewhere around, where was it? For price action was just like that. Where was it? It'll have been over here. Yeah, this gap somewhere in it around $16 and change. When we went below, you know, we came back, filled that gap pretty quickly. Where's the most recent other one? There was this one here. We left that for ages. We only just filled that there now. Is this a gap? It looks like it is. Turn off these guys and I'll see it better. Yeah, that's a huge gap. We only just filled it there now, right? So I mean, we don't have to go in that direction. We don't have to go and do this gap. I know it's way bigger and way more obvious, but like if like this is an important area, right? This like in at $22 and change, right? That's a really important support level. It was previously, it looked like it would be a hard level of resistance to break through. We're above that. You know, that's in the gap. So that's like one artifact within that gap, you know, in the fog of war, where we can see clearly that there's a little bit of respite, right? It's like that cabin, where is it? Up above the wall, where that guy used to eat people and feed his babies to the... Well, again, I'm probably on the edge there of the terms of service, but it was in Game of Thrones, where the Crasters keep, and he'd feed the, you know, to the White Walkers and the Pale Faces in chat. You'll see them, their names come up here, and sometimes in the chat box, they've got pale names. You green, blue, blue, green. I can only see blue and green. There's none right now. Phew. Right, so I say few, not that I don't enjoy their company, it's for your own safety. So, health and safety, that's a big thing, isn't it? Or it used to be anyway. Is that the 90s? Shit, that was the 90s. It's all PC stuff now, not health and safety. Yeah, that was like for the mild outrage that people felt like general frustration at their own existentialism back then. Now it's like made it full-blown pop culture. Like, oh my God! No, what am I saying? Yeah, GameStop and... yeah, I think we're cool, man. Never ending story. That's what it's like, hey. I don't think it's coming back to do that gap right now, but I do think it is going to do it at some point. So that's why I haven't updated the MOAS live stream scheduling. While it might feel like the MOAS is a little bit closer, that's simply because we've gone through a little bit of time. MOAS itself is still fixed there as a fixed point on the horizon, tomorrow. So... that's the way it is. Did I miss anything? I didn't. And I had lots of generous people supporting the show. Thank you so very, very much. If you're watching this show after, you can still support it. You can put in super thanks. You can send, which is okay, but they're great. They're brilliant. Thanks. But also, the stream elements are Streamlabs links in the description. They're better, less fees, they're better. So if you're watching after, think of that. And then definitely join as a member. Look at all these other members here. Tradespotting can't mention that it was a lot of volume, high since March 2022. Yesterday. Boom. Is that yesterday or is that today? Is that this morning? I thought we looked at... I saw a pussycat and we looked at this. That was this morning there. Yeah, well, I mean, post-market, pre-market, they just slap it all in there in the end, don't they? But thank you, Rocky and Jamie. Thank you, Moonman. Thank you, Banana Freeze. Remember, I never forget. Yes, a lot of volume. Since when? 2022. March 2022. Yep, there was a big spike back here. October, but nowhere near as high. And that wasn't all that anomalous. You're looking at that. March 2022. What date? 22nd, 23rd of March. Boom. Well, unlike then, we came from slightly lower. I haven't yet made it that. So, people doubt that you could go from here and continue on, not because of the gap, right? The people that are doubting it are used to this downward sloping resistance line, and not it specifically where it is, but the general trend. They're also used to volatility drying up immediately after any big explosion, and so you yourself are weary. I mean, who am I even talking to? Did anyone ask about this? But I don't think so. I think I just made it a point of the conversation. Or no, it was Eeks. Was it? It was a volatility signal he was talking about. I don't know, can't mind. Anyway, I hope this has been a good, useful show. I know I've done good bits, but I know also that I've stuttered through some bits. So I'm not sure if everyone will be satisfied. I hope they are. I hope they are. It's late at night now, so I've got that excuse. Yeah, it's after midnight, so I've got an excuse. Excuse Factory's back in town. Can I get a flavour for the market maker sentiment if we see another gap up again? You're telling me that'd be good point, Rocky. Whoa, yeah. That is a good point. Market makers, they'll be looking for the liquidity up here. Right? It's like that movie Up with a guy in the house. I think that's a good analogy for market makers, the guy's house in that movie Up. Tradespotting, it was an excellent show from start to finish. Thank you very much, HVP in a 4 hour. Yes, we did that, Eeks. Where were you at? Where were you at? We did that, and we even contextualized how it might not be all that useful compared to how we would deploy it on 2D. Colin S, don't miss it. Yeah, don't miss it, Colin. Or we'll batter you. Don't miss it. You get battered. Hit the like button, you'll get battered. Do all those things, apparently. I mean, it's not true because it'd be against term service, so it's obviously a joke, so it's a parody. You understand? All these things. Comedy. Got it. We need more balloons. Yes. For the gamma ramp. That's how they're all... To Colin's, they're battered already. I'm sorry, Colin. I feel terrible now. It's always the way. It's always the way. You gotta give somebody a good kick in and then you feel guilty afterwards. It's always the way, don't you feel bad? We need to rewatch. Yes. Oh, you didn't see it. Yes, the HVP on the 4 hour, we talked about how this isn't a reliable signal. Was it? We did talk about this, didn't we? Yeah. I mean, it doesn't look like, because you're not getting enough prints, and then if the volatility was to, and why that would happen. We did loads on this. Barclays. Remember all that? Where did you go? We've caught you out. You went away. You didn't put your hand up and ask to leave. What's going on? Somebody should be keeping an eye on this. Thanks, everybody. If you want to support the show, You can by visiting unreasonable.shop and filling your boots with amazing products. But you can do yourself a favor and go to Rocky's Patreon and get on indicator tier, and that's where you should put all of your focus, because there you'll get the fastest progress on your own trading, and then you'll be able to support me in every other way. So make sure that you do that. It's good advice. Yo, it's Don Quixote, 9 months, that's a baby. King Jamie. Boom. Nice way to end the show. Thanks very much, Don Quixote. Be like Don Quixote.